Hello there, so in today's video we're going to be taking a look at Newtek, your business solutions company, ticker symbol NEWT. Let's get that out of the way at the beginning for you. I'm going to try and keep this video a little bit shorter than my usual videos, so I'm going to cut out the balance sheet. We're not going to look at the cash flow forecast, we're not going to look at the income statements. What I am going to do, however, is we're going to look at the share price chart. I'm going to look at the dividends, which are currently over 10% dividend yield on this one, and I'm going to give you my forecasts as well as what buy prices I would have targeted to buy this one at, which obviously I'll give you the buy prices and then we'll go through the various forecasts at the end of the video. If you're new to this channel, welcome. My name's Andy, and on this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you'll get notified every time I release a new video. And if you enjoy this content and find it useful, please be sure to hit the thumbs up to like the video, because that helps YouTube algorithm, which in turn helps me, and of course I do appreciate it. So I came across this video whilst I was researching other high yield dividend stocks. If you saw the video I pushed out last week, which was about a high yield monthly ETF, I'll put a link up there and in the description down below. You'll know that I'm looking to make my own high yielding dividend portfolio, and in doing that I'm looking through a whole host of stocks and shares to try to find both high yielding stocks but also stocks that I think have the potential to grow over the next 3 to 5 years, so that I can see some growth in the capital, but I also want a high income as well. Now, if you are aware of any of such stocks, please do feel free to let me know in the comments down below, because I'll be quite honest with you, I have had some great ideas left in comments of my previous videos, so please feel free to leave your suggestions for high yield stocks that have the potential for growth. Now, that could be a comeback play, one that's been beaten down that you think is going to come back up, or it could be one that you just think has got good potential for growth. But like I say, I'm looking for quite high yielding dividend stocks in that respect as well. So really over 4% dividend yield is what I'm looking for this particular portfolio. So if you've got an idea or something you'd like to suggest for that, please let me know in the comments down below. It would be a great help for me, because at the moment I'm compiling a big list, and when I've compiled the list I'm then going to analyze all of the stocks, and then the best ones I'm going to put into a portfolio, and I'll no doubt make a video about that at some point in the future as well, so you'll get to see what the portfolio is going to look like and how I expect it to work. So if you're interested in seeing that in the future, you're not already a subscriber, there's your cue to hit the subscribe button right now. But let's get on with this particular stock. So NEWT is NEWT is the ticker symbol, so Newtek is the actual company's name. It's a business development company. Now, if you're not familiar with business development, if you've watched my videos in the past, you will know what a business development company is, because you'll know that I invest in Maine. I put out a video, 3 stocks I'm buying. I'll put a link up there and in the description down below, which explains a little bit more about Maine. And you'll also see in my previous videos, I've mentioned Maine and Gain, which are both business development companies. They both pay monthly, those particular ones, and in there I explain what they are. So I'll put links to those up there and down below so you can see those videos now. But basically they lend money to small to medium businesses. Now, Newtek is a little bit different, so the way it makes its money is slightly different to those other two, which take stakes in the companies. Newtek, as the name suggests, your business solutions company, actually has other ways of generating revenue as well. So let's take a look at the slides. How Newtek generates income. Income from subsidiaries that provide a range of business services, including payroll, insurance services, payment systems, human resource services, and employee benefit solutions. They also get money from small business administration loans, SBA loans, PPP, which are government-backed loans, mainly to help with the pandemic, and equity stakes, whereby when they take an equity stake, they tend to take a minimum of 10%. So we can see here on their website, they claim, "We are your total business solutions provider." And if we scroll down, you'll see there's a list of things that they provide. So obviously there's a lending side of things, direct lender servicing in excess of $2.2 billion in loans. I want you to remember that number there. Processing 6 billion in transaction daily, complete payroll, HR and employee benefits solutions, and so on. If we head over to their investor relations page, you can see here it explains Newtek Business Services Corp is an internally managed, non-diversified, closed-end management investment company that has elected to be regulated as a business development company, BDC, under the Investment Companies Act of 1940, as amended the 1940 Act. That means it pays out a very high proportion of its income as dividends, and it actually has to do that. It can't retain too much of the profit within the company. That's part of the benefit, but in return for that, it has certain tax breaks. Newtek provides a range of business and financial solutions under Newtek brand to the small and medium-sized business market. Newtek's products and services include business lending, SBA loans, 501 loans and conventional loans, electronic payment processing, managed technology solutions, cloud computing, technology consulting, e-commerce, accounts receivable and inventory financing, personal and commercial lines, insurance services, web services, data backup, storage and retrieval, and payroll benefit solutions to small and medium-sized businesses, relationships nationwide across all industries. So as you can see, it really does offer to provide a one-stop shop for a small business that's needing a loan. You don't just get the loan from this company, you also get the benefit of all that other support, which obviously there's a cost to, so that gives Newtek an income, but it also gives the company borrowing the money a better chance of survival, because they don't have the headache of worrying about human resources or payroll or other systems. This takes care of that for them, so they can just focus on whatever their core business is, whatever widget it is they're making or whatever it is they're doing. So in that respect, that's how it differentiates itself, if you like, from a lot of other business development companies. So I just want to explain where it gets its income from the loan side of things, certainly the small business administration loans, so you understand the income methodology there. It starts the loans off, basically, it then sells 70-75% of that loan, that is the guaranteed portion, for an immediate premium of between 106 and 120% of the face value of the loan. So that's instant upfront money. It then uses the unguaranteed portion as backing for a bond issue that it then sells to investors. In addition, NEWT gets paid a fee for collecting the payments of the small business administration loans. This gives NEWT reliable cash flow with a quick upfront as well as regular payments afterwards. And if you know me, you know I like regular ongoing payment business models. So this has both the regular ongoing payment business model, but it also, when it does a loan, it actually manages to get a big chunk at the front as well, which is brilliant. So it's kind of a win-win. I'm not going to bore you with the slides. What I'm going to do instead, I'll put a link in the description down below to the investor presentation for this company and to the investor relations page, so you can go and do your own research if you'd like to. But suffice to say, this company is actually doing very well out of the whole pandemic and out of the government guaranteed schemes. It's actually been licensed to be able to provide those schemes to small to medium sized businesses. So it is actually benefiting from any government relief packages that the US government puts out. It actually is able to provide those packages that are government backed. That's the PPP loans. I want to just show you one other little thing before we move on. So this is just one page. This is the only page I'm showing you out the investor presentation. As I said, I'll put the investor presentation down below. I just pulled this one page out. It was page 22 because I thought it was interesting. The company is currently negotiating term sheets with prospective joint venture partners that could create up to 150 million of additional third-party capital to originate up to 1 billion of non-conforming conventional loans and restart this program, which was curtailed due to the pandemic. Now, if you remember earlier, they're actually currently lending 2.2 billion of loans. So this would give them a 50% increase in loan lending capacity, which would obviously give them an increase in income as well. That's why I wanted to point this one slide out. Like I say, there'll be a link in the description to the investor presentation, so you can go and look at that and read it to your heart's content. That explains how different types of loans are set up as well, so you can learn how they do that. They clearly lay that out in their investor presentation, so I'm not going to explain that here. What we're going to do next is we're going to look at the dividends. So here is the dividend overview. As you can see, it claims to be 10.41%. That's the trailing 12 month. The annual payout is 2.05 cents per share. The current share price, as you can see at the top left there, is $19.69 per share. The payout ratio is 95.79%, and it's had a 5-year growth rate of 20.16%. Its dividend growth in years is 0 years, but that's because it aims to pay out the total amount. If we look at the dividend history, you'll see what I mean. The dividends are up and down. They're not consistent. Now, typically, it will normally have its highest dividend as its last dividend of the year. This year, that has not been the case. Due to everything that has happened in the world, you'll see it has been lower. Now, I've projected its forward dividend based on that, and that's a 9.55%. But you can see how its dividend is up and down, and it is paid quarterly. So now let's look at the chart. This is the 10-year chart. You can see it's actually been quite a growth company. If you look here back in 2011, it was $5.95 per share. Even despite the dip now, it's actually almost four times that price. So it has, if you'd have bought it back in 2011, 9 years ago, or 10 years ago I suppose, you would have quadrupled your money in capital, and that's before you account for the massive dividend that you would have been collecting along the way. Now you can see it had a pretty horrendous dip back in 2016, so it's not immune to recessions, and it obviously got hit as well, along with everything else, in early this year. In fact, if we look at the 1 year chart, you can see it went down there to $10 per share, $9.75 per share. It has, however, since largely recovered, but it's still not quite back up to its 52-week highs. Its 52-week high being $20.22 per share. If we look at the 5 year chart, you can see peaks of around $23.63 per share back in 2018, and in 2019 again it was $23.81. What did it peak at here? 23, 22, 23, 23.50. So that was kind of its 2019, 2018 peaks. So before we get started, I just need to let you know I'm not a financial advisor, so this is not financial advice. These are just my thoughts and opinions. So please, before you do any investing, you need to do your own research and your own due diligence. Let's move on. So now let's look at the target buy price. I know this is the part you've been waiting for. I'll let you know my target buy price, my ideal buy price, and then we'll look at a couple of forecasts so you can see the difference between buying at the current share price, buying at my target buy price, or buying at my ideal buy price, and how much that makes an effect, or how much of an effect that has on how much profit would be made from buying this particular stock. So let's look at that now. So you can see the current market price is $19.69. My target buy price is $18.80, but my ideal buy price is anything below $17.64. So if you look on the chart here, you can see it has actually run up quite a lot just recently, since December 29th. It's been on a virtual upward streak. Now that could be up and away from there. If it is, I've missed out, which is why I'm going to look at it at the existing price as well. But you can see that as recently as the 29th of December it was $18.04, so that would have been my target price, or below my target price even. Even on the 30th of December it was still below my target price. If we go back to the 22nd of December, you can see it was actually below my ideal price there at $17.36. And if you look over the last few months, you'll see it's been well within my ideal range. So I'm hoping this is just a short-term spike that will dip back down, and we shall see. If not, then it's whether we consider buying it at this existing price. So let's look at some scenarios now to see if that's worthwhile. This first example is buying at the current share price. So this is the current market price at the time of making this video, and I've assumed that the dividends remain the same and they don't change for the duration of this example, which actually I think is quite conservative. I'm assuming that dividends are exactly the same as they were in 2020. So I'm assuming in 2021 you get the same dividends as in 2020, same again in 2022 and in 2023, and so on, with no increases. So I'm not factoring in future dividend growth. I'm just assuming the dividends stay the same. The only thing I'm increasing is what I think the share price will actually be. And I actually feel I've been quite conservative with those as well. But have a little look and you have to make your own mind up as to whether you think these are correct or not. But these are my forecasts. And if these numbers are correct, then this is how much money would be made buying them at today's share price. So current share price $19.69. If we were to buy $10,000 worth, that would give it a dividend of $1,041.14 per year. I'm expecting that the share price by 2023 will be $21 per share, and if that was the case, you'd get a 6.7% gain on capital plus a 20.82% return in income from the dividends, which would make an average annual return of 13.74%. Now, if you continued holding until 2025, I'm forecasting the share price to be $23.50, which would give a 19.35% gain on the capital plus a 41.65% return just in the dividends that you've earned during that period of time, which would make an average of 15.25% per year total return. So now let's take a look what would happen if you were successful at buying it at my target price. So here's my target price of $18.80 per share. If it drops to that, I should be buying it. And if we were to do that, you'll see the dividends increase. That's because your $10,000 capital purchase now buys more shares. So you're now getting $1,090 per year in shares. You've got a capital gain of 11.7% by 2023 is what I'm predicting, plus 21.8% total return in income from dividends, which makes an average of 16.75% per year total return. And if you hold it until 2025, I'm predicting the share price will rise to $23.50 per share, which gives you a 25% capital gain, which is quite nice, plus 43.62% of your capital will have been repaid to you already in dividends earned during that period, making an average of 17.15% per year total return, which I think you'll agree is quite respectable. Now, if you were to buy it for my ideal purchase price, which is $17.64, then because your capital buys more shares, you get more dividends. So now you're getting an annual dividend of $1,162.13 per year. Again, I've assumed the same target share price for 2023 and again for 2025 exactly the same. 2023 share price $21 per share would give a capital gain of 19.05%, and your dividends would make you 23.24% in income on your capital invested over that period, making an average of 21.15% per year total return. So if you're looking at over a 20% return, that does it right there. 20% per year, you're getting more than that if that prediction comes through. But remember, you've got to buy it for that ideal price to be able to achieve that. If you wait till 2025, I'm predicting the share price rises to $23.50 per share. That'll give you a capital gain of 33.2% plus a 46.49% gain on your dividends earned in income, which will make an average of 19.93% per year in total return. So slightly under 20%. And that's because I've just kept the growth as I've kept it, and I've not increased the dividends per year. It's just stayed the same, whereas in reality they probably would increase. So there's my forecasts and predictions. In time we'll see if I was right or wrong. It'll be a fun thing to see. This may or may not make it into my high yield dividend portfolio that I'm putting together. Like I say, stay tuned, subscribe if you haven't already, if you'd like to see that when I do put that together. And as I said earlier, if you have any suggestions of stocks I should consider for that portfolio, please do leave me a comment down below letting me know what stocks you would consider in a high yield portfolio, because I essentially want to compound my money up a little bit, as I did demonstrate in the compound video that I made. I'll put a link up there and in the description down below about the high growth compounding effect essentially. But that is something I certainly want to achieve with this portfolio. I really want to use the income to just reinvest in other stocks and shares so that I can essentially snowball it and get it bigger and bigger and bigger. Anyway, that's all for today. Thank you so much for watching. I hope you've enjoyed this and found it useful. If you have, please do be sure to give it that thumbs up for me. Other than that, thanks for watching. Have a nice day and bye bye.